Welcome. Today we are conducting a deep analysis of China's September 2025 price data. The numbers reveal a crucial split in the economy, a policy-driven industrial rebound on one hand, and continued weakness in consumer demand on the other. We're going to break down exactly what this divergence means.
So let's get straight to the core thesis. The September data paints a very clear picture of a two-track economy. You've got an industrial rebound that's clearly gaining momentum thanks to policy support, but at the same time, consumer demand is still lagging. This structural divergence is the single most important takeaway, and the gap between core and headline CPI, that is the most critical signal of all.
If there's one number to focus on from this entire release, it's this one, positive 1%. That's the reading for core CPI, and it's a 19-month high. This shows a real underlying strength that is completely at odds with the negative headline number, grabbing all the attention. So the question is, how can both of these things be true at the same time? Let's dig in.
All right, first, let's tackle the consumer side of the equation. This is where we find not only the main source of weakness, but also some of the most telling contradictions in the data.
Now, this widening gap you see here is what analysts often call a scissor gap. On one hand, you have the headline number still in negative territory, dragged down by a few very specific items. But on the other, core inflation isn't just positive, it's actually accelerating. This tells us something crucial. The weakness isn't broad-based, it's highly concentrated, while the underlying pulse of the economy is actually getting stronger.
So what's really pulling that headline number down? Well, look no further than food prices. That steep 17% year-over-year drop in pork prices is doing almost all of the heavy lifting. This isn't a sign of some widespread deflationary spiral. It's a very specific issue tied to the food supply cycle.
But now, contrast that with what's pushing core inflation up, you see a completely different story. A staggering 42% surge in gold jewelry prices points to a clear flight to safety mindset. And at the same time, you're seeing price resilience in durable goods like household appliances. This is a sign that consumer behavior is very, very specific right now.
This all paints a picture of what's being called a K-shaped consumer dynamic. Think about the letter K. One arm goes up, the other goes down. Money is flowing up into safe haven assets like gold and down into basic necessities. But that whole discretionary spending category in the middle, it's getting squeezed. This isn't a broad-based recovery in confidence. It's a defensive and polarized reaction.
Okay, let's pivot now from the consumer to the industrial side of the economy, because here the narrative changes quite dramatically. And interestingly, we see another divergence even within the industrial data. The Producer Price Index, or PPI, shows that prices for upstream production materials are firming up nicely, but prices for downstream living materials, the finished goods closer to the consumer, are actually getting a bit weaker. This tells us the recovery is concentrated right at the start of the supply chain.
So where is this industrial strength really coming from? While the data is unambiguous, the improvement is highly concentrated in state-influenced sectors, industries like coal and steel, where the government actively manages output through what's called capacity governance, account for over half of the entire improvement in the PPI. This is a policy-driven rebound, plain and simple. But it's not all just about heavy industry. We're also seeing these important glimmers of what policymakers call new momentum. You're seeing positive price growth in high-tech and high-value-add sectors. Now, their overall weight in the index is still small, but these price increases are a very clear signal that the strategic push for industrial upgrading is having a real effect. So we have a firming industrial sector on one side and a cautious consumer on the other. The big question is, what does this stark divergence mean for China's macroeconomic policy going forward? This situation puts the People's Bank of China in a very challenging position. It's a classic policy dilemma. If they unleash broad, big bang stimulus, they risk overheating the industrial sectors that are already recovering. But if they do nothing, they risk leaving the consumer behind. They're truly walking a tightrope. So, given that dilemma, we should expect policy to remain highly targeted, more like precision irrigation than a flood. This means fiscal and industrial policies will likely do the heavy lifting, with things like infrastructure investment and supply-side reforms. Monetary policy will play more of a supporting role, ensuring liquidity, but likely avoiding broad rate cuts. And in effect, this policy path is set to reinforce the very economic divergence we're observing.
Finally, let's translate all of this analysis into a clear map of the economic landscape. Which sectors are showing resilience and which continue to face significant headwinds?
This tale of two economies becomes incredibly stark when you break it down by sector. On one side, you have the new economy industries and policy-supported upstream sectors showing real pricing power. But on the other, traditional industries that are much more tied to consumer demand and real estate, think autos and cement, are still under significant price pressure. And of course, this pricing dynamic flows directly to the outlook for corporate profitability. For upstream material producers, there's a clear potential for margin expansion as their selling prices recover. But for downstream consumer goods companies, it's the opposite. They risk a serious margin squeeze, caught between rising input costs from the industrial side and an inability to pass those costs on to a weak consumer.
And all of this brings us to the central question for the outlook. When a policy-driven industrial recovery runs head-on into a persistently cautious consumer, how does that tension resolve itself? This conflict isn't just a temporary data point. It is the defining dynamic that will shape China's economic trajectory in the months ahead.